It's been one hell of a ride for Upstart. Since the May lows, the stock was up like 10 of the last 12 weeks. AI had a big part to do with that rally that saw price move from 15 to almost $70, or Upstart's association with AI. The company said during that time, Upstart pioneered the application of AI to lending, enabling a system that is dramatically more efficient and more accurate for both borrowers and lenders. Rapid developments in AI foreshadow a world where the right borrower is automatically approved at the right price. However, since then, price has just collapsed. Before we continue with the analysis, let's get into this article. It's coming from Yahoo Finance by way of Bloomberg. AI lender Upstart's 445% rally fades after outlook dampens frenzy. And you can see how price rose in May to August and has given up roughly half of that 450% climb. So they reported earnings this past week, specifically on Wednesday, and the stock sold off 34%, the worst one-day loss since May of 2022, after they reported third quarter revenue that fell short of Wall Street expectations. Upstart tumbled early this week as well when Morgan Stanley analysts encouraged investors to fade what appeared to be a low-quality rally. He ascribed the stock's rapid advance in part to declining short interest and the stock's correlation with the rally in companies tied to AI. Now, we've seen a big sell-off in the NASDAQ index. We've seen sell-offs in Apple. They're roughly at a 10% correction. We also seen a decline in NVIDIA, in which it tested the 50-day moving average for the first time in a very long time. The stock's rally was jumpstart when Upstart reported its first quarter results in May, dueling out a second quarter outlook that was ahead of estimates. Now its third quarter guidance is taking the wind out of stock's run-up. This was a case where the stock just ran up too fast, and as it was ascending, it was exceeding what was realistic for the stock market and fair value of the company. However, there is one lone analyst. He comes from BTIG. His name is Lance Jesserun. He says, outside of the disappointing Q3 guide for top line, the quarter was actually pretty strong. Obviously, expectations were ridiculously high. Yes. All right, so let's just stay on the weekly chart. And the question is, how far will price decline before prices stabilize? On the weekly chart, you have this W pattern. Which is a bullish reversal pattern. Typically the apex is where you get a retest, but that apex is in alignment with a pivot low that was established back in May. So if I draw a support resistance band, this would be roughly at $26, which also corresponds to the 26 simple weekly moving average. That looks like a nice area for price to at least pause. let's go down to the daily chart. And the article was specifying that in May, price exceeded earnings exceeded Wall Street expectations. And this past week, earnings did not meet Wall Street expectations. So you had a gap up and then you had a gap down on earnings. Price just got ahead of itself. All right. A lot of volume since May. All right, so on the weekly chart, you have the 26 simple weekly moving average within this support resistance band. When you go down to the daily chart, you can see the 200-day moving average coming into this support resistance band. So the chart suggests price should at least pause because the 200-day moving average should serve as a dynamic support area. Now, I do anticipate tomorrow we could see a green day as people who shorted up in the $60 to $50 area want to take some profits off the table, so they have to buy back their shares. But we'll see. I mean, price right now is roughly $4 away from this level, where the chart suggests prices at least it's going to pause. However, it's not the time to go long. You need to see some type of reversal, maybe a daily candle where you see high volume to give you an indication that price did bottom. But until then, there's a little bit more downside left in the stock. Thanks for watching. Subscribe, please. Like the video.